So I'll give you a short story before I tell you about today's video. A friend of mine who went through something that just before COVID, that was in 2019, that particular incident happened. So the lady lost a husband, and the husband had a life insurance policy that was paying some pretty good amount. And suddenly, if you happen to get, let's say, 5 million at a go without really preparing, you'll be confused. You won't know where you are going to invest the money. And so the first thing that came, there was this hype. There's a company that, locally, that was really offering high interest rate. And I think within that year, they had been promised around 17 to 20% rate of return. So you can imagine, she already had the lump sum from the insurance company. And now she immediately jumped into this craze of investing in that company, since most people are actually investing in the company because it's a trusted one, but who knew what was going to happen with COVID and all that? So when people started withdrawing their money with the panic, the pandemic caused a lot of panic, and most people were going for the investments. They wanted to access their money, and since she had been told about you can access your money anytime, she wanted her 5 million back so that she can keep it safe just in case things go south in the pandemic. But the tricky part was there's no way she was going to access that money at that point, since whatever return had been promised within a year, the company could not deliver. So the only way is either she waits or forget about the money, which the best option definitely was to wait. But here, like everyone else was withdrawing the money from the company, which now made the company unstable. And it has started the long journey of court battles, and I think the case is still going on. So what I'm trying to tell you here is that anytime you're thinking of investing, get to understand what is it that you're investing in, the risks that are there. In case you want to access your money, can you get it? Just learn about investment first before just putting your money anywhere, especially lump sum, large sums of money. Do research on the company you're investing in so that you don't lose your money. We work so hard to get this money, so you better be safe than sorry. So it's important to have investment ideas, investment knowledge, and that's why we are always here to give you that knowledge. If you're new, my name is Sheila. Welcome to Sheila's World, and feel free to give that video a like and also subscribe down there before we continue. And let's learn how we are going to make these millions this year. Get the knowledge, learn, take your time. There's so many information around, so don't just jump into investment vehicles that everyone else is doing. Get to understand what it entails. Get to know, is this something that you might lose your money? What are the risks involved? So nowadays, investment starts even with 100 shillings. With the money market funds that have come up, you can open an account and start putting aside 100 shillings. In the 52 weeks of saving, as I said, you can start with 100. Next week, you add another 100. By the end of the year, you'll have a total of not less than 60,000 shillings in your account. So just have that culture. Follow my other video that I shared about 52 weeks of saving. There's no way you're going to start having a high risk investment. Let's say I've seen people saying, that saving, there's no returns there. And this is one person who has not even started any kind of investment. Let me give you one idea. There's no way you can be comfortable taking high risks if you've never tried putting aside a safety net investment, like a safety way of saving, like setting up an emergency fund, making sure your school fees for your children are taken care of, money for the food is ready for the, let's say, next 6 months. So you have to set that safety net first through saving. I'm going to share 5 classes of asset classes that you can invest in, and that applies to anyone. It doesn't matter the amount of income you are getting. As long as you're able to set aside whatever amount, you can start this investment. So one of them is you need to consider like cash like assets. And that's where liquidity comes in, because you see, when you're starting investment, you can't just put all your money. Like the example I started with when I started the video. This one person who put all the money that she got in a fixed, it's not really fixed, but a high risk investment. She had not considered emergency fund. She had not considered somewhere where she can access the money in case of an emergency, or in case she needed to pay school fees or rent. So you need to think of cash like Cash like assets, things like fixed bank accounts, which I think currently most people have moved from bank accounts to now money market funds, which are more safer and easily accessible whenever someone needs the money. And also Saccos. So Sacco is another option, investment option that you can consider, that is cash like, cash asset. And then the next investment that someone can consider is equities. So you can't move to equities or shares if you've not set up like a safety net under the cash like asset. So under equities, those are basically shares where you buy shares from companies. If you're in a chama and your chama is registered, you have a share in that company. You can buy shares from big companies depending with where you are. So there are many companies that once you buy shares, you become a shareholder, you enjoy dividends. And as you know, buying a share in a company, it also has its own risk. If a company goes down, you go down with it. So get to learn about risks that you're going to take when you're doing your investments. Then another, with equities, you invest for capital gains. Because let's say if I bought a share in a company at a certain price, then the price raised, then the price rises. It means if I sell it, I'm going to gain some interest on my capital. So if you're looking for capital gains, you go for equities. So we also have fixed income assets. That's another way of investing. So for fixed income assets, those are things like you've heard of bonds. I've been thinking about treasury bonds a lot on my channel. If you haven't watched that video, you can check on my video, or I'll leave a link down below so that you can refer for about treasury bonds. Those falls under the fixed income assets, whereby you invest a certain amount of money, then you get regular income every 6 months, or they're called coupons. So you can refer to my tip how to invest in treasury bills and bonds in my video. So that falls under the fixed income assets. And also we have commercial papers, the T-bills, all those are under the fixed income assets. So depending with your capital, you can consider one of these options. Then you also have real estate. When you think of real estate, and I think that's where most people believe there are high returns. Real estate is a good way of investing, because you see with the property, they rarely can you lose in property. And there are many ways of investing in real estate. You can either choose to buy land and wait for it to appreciate and sell, or you buy land, put some farming and earn income out of it. I don't know if you've heard of Reits, real estate investment trusts. If you've not heard of it, let me know if you want me to talk about Reits. And I think I will. I'll make a video on about investing in real estate investment trust. We've talked about unit trust, but there's another kind of investment called real estate investment trust. Find out about real estate investment. If you don't have a lot of money, you can buy units in a company that invests in the real estate. So there's that option. Mostly a good example is the malls. Most of these malls are not owned by an individual. It's just owned by shareholders who buy shares in the company, and you invest in the real estate as a group. So there are so many options when it comes to investment. Then we have another asset option. We have like alternative investments, things like crypto. So before you move, and as I said when I started from the first one, the cash asset, the equities, you can see it depends with how you've been investing. You can't jump from, you've not ever started a cash asset, you've not invested in money market funds, you've not invested in Saccos, then you want to start buying cryptocurrency. There your investment won't last, because you'll be frustrated. These other kind of investments are really high risk, and there's no way you're going to understand cryptocurrency if you don't understand a money market fund. So it's stages, like go slowly, get to learn, understand these investments, what are the risks that are there, and over time you'll invest. Over time your investment will grow. As I said, you can start with as low as 500, but there's something called compound interest, and compound interest applies to every investment. Even for that someone selling groceries out there. When you buy something, let's say worth 10 shillings, then you sell it at 15, you have 5 shillings extra. So for you, you can't just go and use the 5 shillings. You go and add stock with the 5 shillings next time you get 20. So I'll give you a good example. I have a client. I won't really name the client, but this is someone I've been working with for, I think, more than 5 years now. And her investment portfolio has really grown. And it's just as a result of compound interest. This is someone who started with some, like, around 5 million, but currently the portfolio, the fund value for that client without adding any money is beyond 15 million. Yeah, over that period, because of the compound interest. She has not been withdrawing the money, and every time the interest is earned, the following month the interest is declared on a new value. So as long as you leave the money for a while and let it earn that compound interest, your money will really grow. So with whatever amount, you can take advantage of compound interest in this investment, especially for people who are starting up. If you can access, let's say, 100,000 shillings, I would advise you just start with, depends first. If you are looking into short term, start with a money market fund. Then from there, grow the money. It will still enjoy the compound interest every single month. By the end of the year, you'll have your average return. And then from there, grow now into other investments. Those are bonds, things like bonds, but start with the low risk investment as you move further up. So there are so many options. And when it comes to where to invest, it really depends with an individual decision. Whatever you're investing, it has to go with your goal. Like, it has to align with your goals. What is it that you want to achieve? If you're looking into 5-year period, you want to, let's say, to start building, and you want to build some capital, you can put in a bond fund for that period, and then the money will have grown. And starting early is the best way of getting ahead to build wealth. You can't say, I'll wait until I'm very rich. I'll wait until I get that promotion. If you can't start now, even if you get that promotion, you'll get another excuse. So building wealth, investing remains a priority, whether you like it or not. So just invest in knowledge first. Invest in knowledge, and you'll be on the right journey when it comes to investment. I hope you've learned something. Leave a comment below and let me know what you think about today's topic. Have you started your investment journey? Open that account today. Open that money market account today. I think that is the most basic account that anyone must have. So if you don't have a money market account, open it and start with whatever amount you have. And from there, you can grow your investment portfolio. So set up your emergency fund. Put a portion of it aside for investment, and you'll be on your way to financial freedom. I'll see you again in my next video. Give the video a thumbs up if you haven't, and please subscribe. I'll see you later. Bye bye.